Well, howdy there, Internet people. It's Beau again. So today, we're going to talk about Trump's shutdown, the economy, and the disconnect. It's been a bad few days for economic news, and it highlights the growing disconnect between the actual economy and the perception of it by those on the top. Okay, so first we have Trump's shutdown. Republicans, despite having majorities in both houses, refuse to fix the one big broken bill and its impacts on working class Americans. So now we're in a shutdown. The last government shutdown caused $11 billion in economic damage. $3 billion was never recovered. If Trump follows through with his mass firing threats, the economic damage from this shutdown will be immense. He'll make a bad problem worse, because it isn't just those people being fired who lose out, but all of the businesses they shop at. Then we have the payroll company ADP releasing their jobs numbers. It suggests that U.S. private sector businesses lost 32,000 jobs in September. Even worse, the previous month was downwardly revised into the negative as well. ADP's chief economist said, quote, "In fact, though the numbers changed, the story and the narrative and the trend remain the same. Hiring momentum has slowed from the beginning of the year through September." That's bad economic news, especially when Trump is threatening to compound the problem by firing government workers. It's even more unsettling because government numbers won't likely be coming because of the shutdown. Then we have the price of gold. Investors use gold as a safe haven. When the price of gold goes up, it's generally bad news for the economy as a whole. Gold hit a record $3,858.45 per troy ounce. Trump slapped more tariffs on lumber and on cabinets. I'm sure that'll help the housing market. Business spending and consumer confidence are all flashing recession indicators, along with a host of others. What's happening with the stock market? It's trending slightly up. This week shouldn't have seen a positive market. It is divorced from the economic realities at this point. And we've now hit the point where a lot of financial news outlets have changed phrasing and framing a bit. They're no longer talking about whether the market is headed to correction or crash, but they're trying to pick the month or quarter it'll happen in. It's no longer if, but when. If you were to search market crash in Google and then click news, you'll see it. On that note, we've had a couple of questions about the October effect. It's a belief that October is bad luck for the market. 1929, 1987, some of the bigger falls in 2008, all October. But real analysis shows it to be coincidence. That being said, when the market is running on emotion and there's a widespread superstition that influences emotion, it might end up being a self-fulfilling prophecy. Americans desperately need to stop using the market as a general metric for the economy. If that trend continues, a lot of people will be caught by surprise, and surprise or shock downturns are more difficult for people to manage. The stock market is not the economy. Anyway, it's just a thought. Y'all have a good day.